100 points. All right. Morning, everyone. Let's get going here. All right. Last night's session in the States was a bit of a drift lower there for most of the session. You can see we more or less finished on the lows in the S&Ps, but not a whole lot of leadership. Everybody's sitting around waiting for Greece. Obviously, yesterday it got to a ridiculous point where one headline after another, every 30 minutes, every hour, coming out saying a different story with between the Greek and Greece and its creditors, and to a point the market has stopped reacting to them. And today I think is the second day of the two-day summit there in Brussels. It's huge because they really need to. I mean, they have to get something resolved basically by the weekend. Otherwise, you really do have problems, I think. And so today, there's probably a good chance for there to be some headline risk out there again. There are more things going on. We'll jump into that now. That's out of Asia, where you can see there. This is only an hour and a half ago. Shanghai was here. We're now down 7.5%. So we're set for the biggest one-day loss since 2007, which is obviously significant for different reasons. They tightened margin lending rules only a week ago, and for accounts under $80,000 equivalent, they basically are pulling the ability to borrow. So I think obviously that could potentially start to spill over if this continues. At some point, I think it will start to make a difference to the rest of financial markets, but you just got to keep a close eye on that. As of right now, it's making very little difference. And we've got the S&P up a half a point right now. There's absolutely nothing going on. No reaction from what's happening in Shanghai at the moment. Australia also got hammered this morning. It looks small there, but we're down over 1.5%, which is the biggest move we've seen there in a long time. That's on the back of the mining stocks getting smashed for whatever reasons. Yesterday they were really soft. Some of them definitely dropping support. We'll get into some of the mining stocks here. They're definitely looking like they potentially have another leg down. And I think worth a look this morning. We're going to see some of these things definitely dropping support on the open, I would expect today. All right, chart of interest of the day. Talking about the S&P moving sideways since the end of QE3 and just losing any and all momentum, as we talked about. Now this is going to close out, unless there's a dramatic move today. It's going to close out our I think 9th week of less than 1% move in the S&P inside the week. From the beginning to the end of the close, and it's just getting to a point where I don't even want to go to the look at the markets in the evening, because I know they're not going to move. It's just gotten to such a point of monotonousness that I just when it's going to end is anybody's guess. But when we break out, I think it could be quite spectacular, because we're really, really building into an intensely long period of sideways consolidation. All right. In terms of corporate action today, only things to really speak of is a few of the stocks that will go ex-div over the weekend. That is CLS, ILV, NPK, OCE, PFG, and VLEs. So just have a look there at the divvies. Don't forget about those if you're involved there or looking to get involved. All right, and market data today, a bunch of stuff out of Japan, nothing too important. We've got the M3 money supply numbers out of the Eurozone at 10, and then we've got University of Michigan consumer sentiment numbers out at 4. So not a whole lot, but we're going to be probably sitting here watching for a headline the entire day. I mean, the volumes have been low, the volatility has been low of late, so it's kind of the new adjustment. I think you just got to be able to sit and be patient. We talked about this yesterday. I think in this market at the moment, it's very likely that the best trade is no trade at all, more often than not, simply because there's so little volume and a very indecisive market. Okay, let's get into the maps. Okay, first thing I want to look at this morning is Brait, which has gone absolutely parabolic here. You can see, I mean, we were trading in May. We were literally trading under $90. Yesterday we got up to 118 at one point, but we've got a beautiful little cup and handle formation here, breaking out yesterday in style. Our target here is going to be the height of this channel, which is about $10. So breakout here at 113. We're looking for about 133 target, or sorry, 123 target, and we're starting to get close to it. Next one we'll look at is PSG. So PSG, potentially a couple of things going on here. We were looking a bit head and shoulderish. I think we still could be looking head and shoulderish if we roll over from this 200 level. I think the close above 200 was significant yesterday for obvious reasons. You can see there that was a big resistance level back in April, but it wasn't really decisive this morning. Most of the stocks are probably going to open lower, so you wouldn't be surprised to see this one open lower as well. But bottom line is this could be a little bit of a leading indicator for this one, Capitec. They've been trading very similarly of late. This one hasn't made the same sort of bounce. Still below what I would say the neckline of the head and shoulder was, and didn't quite reach the target. But I just wish it would have gotten down another $10, and probably would have loved to have a nibble on this thing. This thing's incredibly overextended, more than doubled over the last year. And anyway, watch PSG closely. This could be a great little leading indicator for this one. If we get above, call it 510, then this thing could start to make moves back up to the highs, especially if PSG starts sort of leading the way. In the mining space, okay, we're going to hit a couple here to finish it up. And what we've got is we've got a stock like Impala's, which has really just had a real inability to show any significant amount of bounce over a long period of time. I think what's important to note here is that we put a lot of consolidation around these sort of levels, and I mean we've probably spent between the lows down here in March and April and these lows here now, we spent at least, I would say, 10 to 12 days where we actually touched 58. Yesterday we got our lowest close, the first close below 58 in Impala's. Like I said, I was mentioning a second ago, and PSG. This one also is not. It's not convincing. Dropping that level by 30 cents is not convincing in any manner. But if we continue to push lower this morning, which I would expect that we would, because of the pressure that we saw on the mining stocks in Australia, the pressure that we're seeing on futures here at the open, then I think that 57, trading down around 57, especially if we drop into a 56 handle, that would really give me conviction to think that we're going to trade convincingly lower. And what I like so much about this chart is how symmetrical these drops are. So we really get into this range, these range moves for 2 or 3 months here, and then we move out of it, and then again, and then move out of it. And so we did it here. You can see we were in this range back to the end of last year, beginning of this year. We dropped out. We very quickly got our move down of 10, 12%, and then we consolidated. We've been consolidating for 3-4 months. We've been putting a lot of time in here the last 2-3 weeks. Haven't been able to get any sort of bounce. I think this thing's ready to break down. And for me, we're going to go. We're going to go well into the 40 handle. I think we can trade down close to 45 on Impala's on this breakdown if we get confirmation today. And then the last one we'll look at here is Billiton. So Billiton came back up after dropping its 200-day, coming back up to test its 200-day. We briefly got above it, but nothing convincing. And it's never ever looked convincing trying to get back above the 200-day here, and really right at trend support. I think that this is very quickly starting to look like a bearish chart to me, and maybe a little bit of a ascending triangle here. Drop out support here. I think this thing can get wiped. And I think it can get hit really hard. I think the way that commodity prices are reacting, the lack of ability to bounce on good news, for global economies and things like that, has really been it's been weak. So I think there's a good chance that this thing can, if we drop support today, which we will at the open, we can trade significantly lower, and this could give us a big down target from here. And that's it for today, guys. Good luck out there.